Welcome back to the channel, guys. We have a lot to go over today. First, I'm going to start out with going over some major updates I did to my portfolio, and then I'll be transitioning into the topic of today's video, which is over one of the best monthly dividend ETFs, JEPI. Guys, let's get right into this. So this past week, the market was up and down, but I think the general market ended negative. However, as you guys can see, my portfolio actually did pretty well this last week. I had a market gain of $375.62, and I earned dividends of $37.36. And as you can see, I'm back to $44,000 at 635. But what I want to go over with my portfolio updates is I decreased the allocation in real estate from 25% to 20%. And the reason I did that was because I wanted to increase the allocation in my higher dividend growth stocks. So I brought AWK, Costco, Home Depot, Microsoft, and Texas Instruments, all from 3% allocation to 4% allocation. As if you saw my last video, they all have very high dividend growth rates, and they're all great companies. And another thing I did is I decreased Verizon from 4% to 3%, and I increased Pepsi from 3% to 4%. And now if we go into my activity feed, a lot happened this past week. So scrolling down to the 28th, Nusi gave me a dividend of $13.13. Good gave me a dividend of $21.75. LTC gave me a dividend of $7.68. And I also deposited an extra $90 last week, as well as my regular $125 every single Monday. And I bought 6 stocks on February 28th. So I chose to put $30 into Microsoft, Texas Instruments, and Costco. And then my $125 I deposited, bought a little bit of Nusi, Q Yield, and JEPI. Then moving on to the next one, on March 1st, I received a $3.35 dividend from American Waterworks, AWK. And then I also bought $44 worth of Home Depot with my automatic reinvesting. And then I deposited $800 because I wanted to buy a new stock. And I actually picked up RYLD, which is the covered call ETF for the Russell 2000. And I'll be making a video on this stock in the future. And actually, let's go back to it, see if it shows. I bought 34.73 shares for 23.03 cents share price. Then I received an awesome dividend from QYLD of $26.86. And I decided to deposit another $200 to buy more RYLD. And then my dividend bought Home Depot and American Waterworks. And then I received a great dividend from JEPI, which I'm going to talk about soon, of $16.14. And then I also received Pfizer of $12.54. So that was a huge week. A lot of stuff. And actually, let's go back. Yeah, a lot of stuff happened. Let's go back to my portfolio. The Quadfecta, I updated the title from Trifecta. As you can see, 7,900. And one of the reasons I bought RYLD was because when I first started the Trifecta pie, it was 50% QYLD, 25% JEPI, and 25% Nusi. And then to give myself a little more security, a little more diversification, I was 40 QYLD, 30 JEPI, 30 Nusi. Now I'm straight up and down 25%. I just need to put, I think, 3,300 into this portfolio and everything will be even. And let's see. So if I go to research, I can actually show you the Quadfecta pie. And as you can see, dividend yield of 10.356%, expense ratio of 0.53%, which actually lowered my expense ratio. And I think the actual dividend yield when you take dividend minus expense is 9.83%. But my goal in the future is to get all of 4 of these stocks to 25% and then to start investing back into my regular portfolio so I can invest in those high dividend growth stocks. And now, guys, we're going to transition to the topic of today, JEPI, which stands for the JP Morgan Equity Premium ETF. Right now, it has a current share price of $59.86, and it has a current dividend yield of 7.15%, and it has an expense ratio of 0.35%, which it's still high, but it's kind of in the middle. Like, it's higher than the S&P 500, but it's lower than like the previous stock that I went over, Newsy. And we have a market cap of 6.98 billion, which is great to see. That means a lot of people are investing in it and they trust in the stock. And one of the cool things about JEPI is that it actually tracks the S&P 500, and I'll be going over a back test later on in the video. So I want to go over the fact sheet. And JEPI is designed to provide current income while maintaining the prospects for capital appreciation. And their approach for this is they generate income through a combination of selling options and investing in large cap US stocks. And they seek to deliver a monthly income stream from associated option premiums and stock dividends. And it constructs a diversified, low volatility equity portfolio through a proprietary research process designed to identify over and undervalued stocks with attractive risk and return characteristics. And it also seeks to deliver a significant portion of the returns associated with the S&P 500 index with less volatility in addition to monthly income. And as you can see, the portfolio managers right here, they've been in the business 35 years and 31 years, which is great to see. And here we have JEPI launched in May 20 of 2020. And if we scroll down to the top holdings, they have the SPX. These are their options contracts, which is what the majority of their top holdings. And they also have DTE Energy, Microsoft, and MasterCard in their top 10 holdings. And if we come over here, you can see their sectors: communication services, consumer discretionary, staples, energy, financials, healthcare, industrials, information technology, materials, real estate, utilities, and other. And they actually have 103 stocks in their holdings. And then if we go, I want to show you guys Vanguard, the VOO, the S&P 500 index for comparison. And as you can see right here, their top 10 holdings, which are 30% of the index, are Apple, Microsoft, Alphabet, Amazon, Tesla, Meta, Nvidia, Berkshire Hathaway, Johnson & Johnson, and United Health Group. And you can see their sectors are communication services, consumer discretionary, consumer staple, energy, financials, healthcare, industrials, information technology, materials, real estate, and utilities. And then, guys, let's get into the back test for JEPI. So I did time period year to year from 2020 to 2022 because JEPI started in 2020. I'm doing an initial amount of 100,000, no cash flows. I am reinvesting the dividends. I'm displaying the income, and then the 3 portfolios that I'm doing are JEPI, QQQ, and SPY, the S&P 500. So I already hit analyze portfolios, and let's see what happened. So as you guys can see here, the blue line is going to be JEPI, the red line is going to be the QQQ, and the orange line is the S&P 500. And surprisingly, QQQ fell from grace. Normally when I've done these back tests, QQQ has been at the top. They're actually at the bottom here with 111,000 as their final balance. This did it from December 31st all the way to February of 2022. And JEPI actually came in second place with 115K, and the S&P 500 was at 118K. And what I actually wanted to show you is that JEPI, even though it had the lowest best year, it still performed in the double digits, still did really well at 21.51%, QQQ at 27.42%, and the S&P 500 at 28.74%. And if we look at the worst year, you have JEPI with performed the best at negative 4.67%. You have the QQQ at negative 12.83%, and the S&P 500 at negative 8.07%. And then, guys, now what I want to get into is the income. So as you saw, well, if we go back to the returns, as you guys see, JEPI right here, the blue, and the S&P 500 is the orange. JEPI followed the S&P 500 like it's supposed to very well. It's only slightly down. And if you actually looked at the S&P 500 and JEPI year to date, JEPI is outperforming the S&P 500. And now, guys, when we get to the income in 2021, you can see JEPI has $7,708 in income. The QQQ brought in $542, and the S&P 500 brought in $1,537. And so far in 2022, JEPI has brought in $735. And so what you can take from this back test is that JEPI has performed exactly how it's supposed to. It's tracking the S&P 500, and it's providing you with that solid monthly dividends. And I don't know if I actually mentioned this. If you take the dividend yield of JEPI, which was 7.15%, and you subtract the expense ratio of 0.35%, JEPI's true dividend yield is 6.8%. And what I actually want to show you guys is the monthly income I've been earning from JEPI. I first started investing in JEPI, I want to say around April, and I received my first dividend on May 6th of 26 cents. And I just kept investing into JEPI. And as you can see, I went to 65, 2. We had a down month where they didn't pay, their options didn't perform as well. However, they got right back and started doing better. In this last month, JEPI had a huge increase in their dividend. So guys, as you can see, JEPI is a dividend stock that I enjoy holding because they've given me solid capital appreciation by following the S&P 500, and they've given me what I really enjoy is the incredible monthly dividends, which just keep growing. That's what I'm after. So I do recommend JEPI as a solid monthly dividend ETF. And so guys, thank you for watching, and don't forget to get your $50 free when you sign up to M1 Finance with my link in the description. You can also get 2 free stocks when you sign up to Webull with my link. And guys, go ahead and follow me on Instagram, and don't forget to like this video, comment down below because I'll be answering all the comments, and subscribe if you want more investing content like this. So thank you guys, and I will see you next week.